Hello everyone and welcome back to Nishma's Area Launch. Over the past few classes, we have been discussing about redemption of preference shares. If you have not watched my first and second part of the video, please do watch that and come back to the session. Today's session will be a continuation of the previous one. We will be discussing about non-traceable shareholders. So, at the time of redemption of preference shares, certain preference shareholders may be found missing. That is, they might have changed their current location to some other place, maybe within the country or maybe outside the country. In any ways, they might have not communicated the same with the company and they have not updated their resident status. So, in either of the cases, the company will fail to approach the concerned shareholder, and as a result, their repayment of capital does not take place. So, what will the company do with their fund, that is the capital fund to be repaid? So the answer is simple. We will treat that fund as a current liability. The reason why we are treating it as a current liability because you don't know when that shareholder will come back to the company and they are going to ask about the repayment of capital. So the company wants to keep that fund always handy. So whenever their endorsee or the real shareholder himself come and approach the company for repayment, they can provide it at the same time. So for better understanding, let us do a question. So this is the question. The following is the balance sheet of Kaveri Limited as on 31/3/2018. Equity and liabilities, share capital, preference share capital, 5,000 shares of rupees 100 each, rupees 5 lakh less final call rupees 20 unpaid, which will give you 4,000 rupees. Equity shares, 60,000 shares of rupees 10 each, 6 lakh. Reserves and surplus, statement of profit and loss, 3 lakh. Securities premium, 30,000. Current liabilities, which consist of sundry creditors, it is 54,000. But total you get for 14 lakh 80,000 on the liability side. Now moving over to asset, non-current asset, fixed asset 12 lakh, investment 1 lakh, current asset which is bank 1 lakh 80,000, and then you will get a total of 14 lakh 80,000 on the asset side as well. Now moving over to adjustment, preference shares are to be redeemed at 10% premium. Investments are sold at rupees 80,000. Sufficient amount of equity shares are to be issued at rupees 10 each at a premium of rupees 1 per share. 1 lakh balance is to be maintained in profit and loss account. Securities premium may be utilized for paying premium on redemption. A shareholder holding 100 shares is leaving India for good. The company could not trace him. Past journal entries. Now, this is the question. Now, let us critically analyze each part of the question. Alright. So, in the balance sheet, we are given the details about the preference share capital, and it is 5,000 shares of rupees 100 each, and there is something remaining to be called, that is 20 rupees is remaining to be called. So, you have to make that final call first, that you have to keep in mind. So, I am just putting a star here. Then, you have reserves and surplus, that is statement of profit and loss, and securities premium. Okay, fine. Then on the asset we have fixed asset and investment. Then we have bank account details as well. Now moving over to the adjustment. Preference shares are to be redeemed at 10% premium. So you are to redeem the preference shares at 10% premium. Then you have investment. Okay, investment, it is having a book value of 1 lakh rupees, but now it is sold for 80,000 rupees. So there is a loss of 20,000 rupees. Okay, so there is a loss 20,000. How you got the 20,000? Book value 1 lakh minus market value or the selling price of the investment, that will give you the loss. Okay, so that is 20,000. Then sufficient amount of equity shares are to be issued at rupees 10 each at a premium of 1 per share. So in this question, you are not given the details about the fresh issue, how much shares you are going to issue for the redemption purpose. Instead, you are asked to find out that the amount of equity shares to be issued. So there is a calculation part there. In the previous question we have done, there the equity number of equity shares to be issued was given, and in this question you have to calculate the number of equity shares to be issued, and it is given that you have to, the face value of the share is 10 and you are going to make an issue at a premium of rupees 1 per equity share. So that must be noted. Now the next point is rupees 1 lakh balance is to be maintained in the profit and loss account. Alright, so you have to maintain a reserve, or you have to maintain some balance in the statement of profit and loss. Then securities premium may be utilized for paying premium on redemption. So some students will get confused because we in the last class we have already told that securities premium cannot be utilized for the purpose of meeting redemption, premium on redemption. But in this question they are giving the permission to utilize the securities premium account. So it is alright. You can use the securities premium account here provided it is given in the question. Otherwise we will not make use of securities premium account. Last point is a shareholder holding 100 shares is leaving India for good. The company could not trace him. Past journal entries. So a shareholder holding 100 shares have left India for good. That means the company is unable to trace him as well. So there is a non-traceable shareholder here. So this is the question. Now let us move on to the solution part. So here we have to do some calculations. Only after that we will be able to go to the journal entries. So in these in this point you were asked to find out the number of equity shares to be issued. Now to find out the equity shares to be issued, you must first find out the balance or the profit that is available for redemption. So let us calculate first the capital redemption reserve, the amount to be transferred to capital redemption reserve account. Okay, I'm going to just calculate the amount to be transferred to CRR. But before that you have to calculate the amount or the amount of divisible profits that is available for redemption. So in the statement of profit and loss account it is given a balance of 3 lakh. It is given 3 lakh, right? Now from that you have to deduct loss on sale of investment, which is 20,000. So you have to deduct that less loss on sale of investment which is 20,000. Now you are also asked to keep a reserve or a retained amount of 1 lakh within the business. You are here in this point it is told 1 lakh rupees is to be maintained in the profit and loss account. So you have to keep a balance of 1 lakh. So you have to deduct that also. Retained amount is 1 lakh. So the remaining amount will be 1,80,000. This is the amount of divisible profit available for redemption purpose. And this is the amount to be transferred to CRR, that is capital redemption reserve. This is the amount to be transferred to capital redemption reserve. Always the amount that is amount from the divisible profit which is utilized or which is put into the redemption purpose of preference shares is transferred to capital redemption reserve. So this is the amount to be transferred to capital redemption reserve, and at the same time this is the part of divisible profit which is available for redemption after meeting the loss on sale of investment and the retained amount. Alright, now you have to calculate the amount of fresh issue that you are going to make. Now back to the preference shares. You are going to calculate the amount of equity shares. Alright, amount of equity shares to be issued. So for that you have the preference capital of 5 lakh. Though there is a final call remaining, never mind. Let us proceed with the further information. Okay, so then you have to subtract the divisible profit. divisible profit available, which was 1,80,000. So if you deduct this divisible profit from the preference share capital, you will get a total of 3,20,000. 3,20,000, and this is the amount of fresh issue to be made. Okay, this much amount of equity share capital has to be issued for meeting the redemption purpose. Now it is told that each share is having a face value of rupees 10. So how much number of equity shares are to be issued? Number of equity shares issued is equal to 3,20,000 divided by 10. 10 is the face value. Okay. So you will get 32,000 shares. Okay, this is the answer. You are going to issue 32,000 shares at the rupees 10 each and at a premium of 1 rupee. Alright, so this is the working note for the answer for this question. Now let us go on to the journal entries part. Now moving towards the journal entry, the first entry is of making the calls fully paid. So there was a calls in arrear, that is rupees 20 was remaining to be paid. So first of all you have to clear the unpaid amount. Only then we can carry out the redemption procedures. So you have to make that 20 rupees fully paid. So you will pass the journal entry as bank account debtor to share final call, or you can make it calls in arrears. So that is 4,000 rupees and you made that all the preference shares fully paid. So that is the first entry. Now the second entry is that you have sold investment worth rupees 1,00,000 for 80,000 rupees. So that entry you have to pass. So the entry will be bank account debtor, statement of profit and loss account debtor to investment. Bank account, you sold it for 80,000 rupees. And next one is profit and loss account. That is nothing but loss. Okay, so that is 20,000. Then to investment, what was the book value of investment that you have sold? It was 1,00,000 rupees. Now the next one is fresh issue. So what is the entry for fresh issue? Bank account debtor to equity share capital. And here you have issued it for premium of 1 rupee. And there was a total of 32,000 shares having face value 10 rupees. So bank account debtor to equity share capital to securities premium. Equity share capital you have already calculated. It was 3,20,000 and there was 32,000 shares. And for 32,000 shares you are asked to collect 1 rupee premium. That means total amount of premium will be 32,000. 32,000 shares into 1 rupee. That will give you 32,000 as premium. Okay, then if you add the 3,20,000 plus the premium amount 32,000, you will get the total value of shares issued, that which is 3,52,000. So that is the third entry. Now the fourth entry is the entry in which the preference share capital becomes due. So what will be the entry? Preference share capital account debtor, premium on redemption account debtor to preference shareholders account. Against preference share capital you write the face value, which is 5,00,000, and against premium on redemption it was 10%, right? The preference shares were to be redeemed at 10% premium. So 10% of 5,00,000 will give you 50,000. Okay, so the total amount due to the preference shareholders were 5,50,000. Now we are going to the most important part where the non-traceable shareholders come into the stage. The next journal entry is to settle the preference shareholders. So here you can see preference share capital account debted to bank 5,39,000. How did you get that 5,39,000? You have to do further calculations. For that, you are told that a shareholder holding 100 shares were leaving India for good. So that means that person has become a non-traceable shareholder. So in the question it was given the number of preference shares to be 5,000 shares, and out of that 100 shares have become non-traceable. Okay, so less non-traceable traceable shares, it is 100. So you get a total of 4,900. So only you have to repay these 4,900 shares for the time being. Remaining 100 shares are to be redeemed later when the owner comes back. So this is the amount. Now you are not going to redeem them at their face value, but you are going to redeem them at premium. But you have not calculated the amount of premium per share. So for that, you know that 50,000 is the premium amount. Premium is 10%, which is 50,000. That is 5 lakh into 10%. So that is 50,000 rupees. Now how many shares you have in total? 5,000 shares. Okay, when you are calculating the premium, you just ignore this 100. You have to take the totality, because you are going to calculate the amount of premium due per share. So this divided by number of shares, that is 5,000. This is the number of shares. Okay, number of preference shares. It is 5,000. So you will get how much? 10 rupee. Okay, so rupees 10 premium per share. So the redeemable value is 100 plus 10, that is 110 rupees. So for this 4,900 shares, you are going to pay rupees 110. Alright, 4,900 into 110. 100 is the face value and 10 rupees is the premium per issue. Per share. So you will get a total of how much rupees? 4,900 into 110 will give you 5,39,000 rupees. For 5,39,000 rupees. So that is the amount. That is how you got 5,39,000 rupees here. 39,000 here. So this is the calculation. First you have to calculate the amount, the number of equity shares, number of preference shares that you are going to redeem at the time. So that you got 4,900, and you have to calculate the premium due per share. So that also we have calculated, that is rupees 10. So for one preference share you are going to pay 110 rupees. Alright. So the total amount to be repaid right now is 5,39,000 rupees. So that is what we have written. Now you have to calculate the amount due to the non-traceable shareholder. How you will calculate that? It is simple. You know that per preference share to be redeemed, you have to pay 110 rupees. And you know the number of non-traceable shares. It is 100. Now 100 into 110 rupees will give you how much? Just 11,000 rupees. Okay, this 11,000 rupees is the amount due to the non-traceable shareholder. Non-traceable shareholder. Alright. Now this amount, what will you do with this amount? You have to take it as a current liability and show it in the balance sheet. That's it. This is a current liability. If you are asked to prepare a balance sheet, you will have to show this 11,000 rupees in the current liabilities column along with creditors. So this is the calculation of non-traceable shareholders amount due. So that's it. Now moving to the journal entries. You got 5,39,000, and then you have to settle the securities premium. That is from you have to meet the premium on redemption, and in the question you are asked to meet that from securities premium reserve account. So you are going to do the same. Securities premium reserve account debtor to premium on redemption. Premium on redemption, the amount was 50,000 rupees. Now the last one is surplus of statement of profit and loss account to capital redemption reserve. That is the amount you have calculated. That is the amount of divisible profit available for redemption. that is given here. So that amount you have to transfer it to capital redemption reserve, which is 1,80,000 rupees. So this is about non-traceable shareholder. I hope this problem is clear to you. If you have any doubts, please do comment that in the comment box. Thank you.